Hi, everybody. Hi, everybody. This is Leah. Google has changed things up, but now I see that we are live. Or now I'll learn this one. I hope that everybody had a great weekend. It has been a week. I know we've missed you guys. The webinar went really well and really long because you guys had really, really good questions. So we were following markets and decompressing, but it's really, really good. And just saying, if anyone still wants to purchase it, it's on the website. But it was a lot of fun. Shout out to Socrates. And today we're going to talk Bitcoin. The markets are crazy, and that is a true fact, traditional markets as well. But Bitcoin's pump and dump and all this stuff and FUD and all that good stuff. So today is Bitcoin. Dr. Hyperwave.
Good morning, everyone in the Eastern time zone, and all of you from other places. Great to be on again. All Bitcoin today, and it won't go on for very long, but this is a great opportunity to make some distinctions between hyperwave analysis and my calls about the 4,200 resistance area, which has nothing to do with hyperwave. So the tweets that I sent out 2 or 3 days ago, making that distinction, have gotten a lot of very confusing responses. And so I want to spend the next 30 minutes or so just talking Bitcoin, where we are right now, and why at various points I make comments about the price action in Bitcoin that are unrelated in most ways to anything about Hyperwave. Hyperwave stands on its own in doing a very few things. There are very few rules, very easy to follow once you understand what those rules are. And we're not going to go over hyperwave theory other than to say, we in the webinar that we did, we were supposed to do 8 hours and we ended up doing 11 hours, and we didn't cover half the stuff that we needed to cover. And the complexity has nothing to do with the rules. It has to do with understanding why the rules are there and when you can use them. Some of the comments that we've been getting about our $1,000 target, I think have been cleared up by those who have listened in detail to the evidence behind why 1,000 is a target. But for anyone else, I can see why it's so difficult to understand my confidence level for that particular target. So what I've done over the last several days is I've gone back and tried to figure out how many decisions I've had to make as an institutional money manager over the years. And I ended up with something on the order, I've probably done 20 to 25,000 trade decisions since I became a professional. And only approximately 1 out of 100 had anything to do with hyperwave, which means it's a fairly useless tool for me as a technical analyst and as a money manager, because I don't get to use it very often. I can go for years never doing anything with a hyperwave because there's no hyperwaves to do anything with, or because ones that appear to be in a hyperwave-ish position are too early to make that determination, and then I've got to wait 2 or 3 more years for any evidence that it's really a hyperwave. So the most important thing you can understand when listening to me talk about making decisions to buy or sell the gold market or the stock market or a particular stock or sector, or even Bitcoin or the other cryptos that I don't believe are in hyperwaves, is that my comments have nothing to do with hyperwaves. If there is a hyperwave that's active and I identify it as such, I will tell you that Bitcoin is in a hyperwave, and here is what it means: going up, coming down, and when it ends. And when it ends, it's no longer a hyperwave, but it's still a Bitcoin. So if and when we hit 1,000 at the bottom, there is no more hyperwave. Forget hyperwaves. Now you have to use other tools to make decisions about that particular asset. All right, that's point number one. Point number two is I'm going to do some screen shares here on only Bitcoin. And what we're going to do is we are going to pull up a Bitcoin chart. And we're going to use two Bitcoin charts, one on Bitcoin Wisdom, which I still find the easiest way to look at Bitcoin. And then we'll go to stock or trading view, where I can do more detailed analysis. So first of all, what I will do is I will get rid of this guy and I will bring up this guy. Okay. Now I've drawn a whole bunch of lines on this, and I've got stop and reverse points. This is the Bitcoin hyperwave as it exists now in the phase 7 on its way down to its terminal point, wherever that is, which I believe to be 1,000. And at 1,000, the hyperwave disappears. It's no longer there. Until we hit 1,000, the hyperwave is still active. And that just has to do with rules that I'm not going to go into right now, but just understand what I'm saying. Okay.
Tyler's son joined. Hence the Indian food background. Tyler,
Hey, can you hear me?
very loud. Ty,
Yes.
can you hear the background music?
Yeah.
That's Tone. Tone just jumped in.
Oh, terrific. Hey, Tom.
Hey guys, can you hear me?
Yeah.
Yeah. How are you?
All right, I am in a very famous restaurant called Bahara here in New Delhi. I'm gonna flip my camera around real quick for you guys because the food just arrived. Can you see it?
Looks good.
Boom! Look at that.
Looks good.
Wow.
We got it's
Fabulous.
like and you the dish that just arrived. You don't see that. That is not on camera. I am not eating bread. No, I actually am gonna eat the bread. But yes, I am in New Delhi, and tomorrow that's a whole fish right. Yep, that's where I'm at right now. But I'm happy to talk some Bitcoin.
Terrific. I
Nice.
Great, Tom. I just brought up Bitcoin Wisdom chart. What I'm doing today is I'm trying to explain the difference between my hyperwave target and my recent
Everything
call
with the hands, dude. Can you
about
can you with your hands?
Hey, Tone, can you mute yourself?
Yeah, that's weird.
Yes. I'm not sure my. I don't think my headphones are actually working for audio, but I'll mute myself.
Cool. All right.
okay. So what we're looking at now is Bitcoin from its run from $592 up through phase 1, 2, 3, 4, 5, 6, and the current wave 7 coming down. Now, the lines that I've got drawn here, I'm going to blow these up because this is the action over the last 4 months or so. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 candles. Now, my calls saying that the 4,200 level on Bitcoin, while we are below those levels, the 4,200 level to me is very, very difficult to get over. But what I wanted to make clear today is that has nothing to do with Hyperwave. That has nothing to do with any other technical tool other than these lines that I've got drawn. I call these parallel lines a field. And the field is generated by going back into time over to this side of the chart. On the way up, these two lines you see, first of all, were very heavy resistance in a breakaway move up from all the way down at close to $1,800 up to this $4,000 range. And then it stopped it for 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks. During that 9-week period, what happens is buyers and sellers are fighting to gain control of the ultimate direction of any asset. And in this case, it was Bitcoin. When we finally broke above that on this candle that took us all the way up to 5,300 and 5,846, on this candle, these two lines became, in my world, massive support for price. And we didn't have to worry about that all the way up to the top and all the way back down, because we ran into another area right around here, which was 7,350 at the top and approximately, as everyone knows, 6,000 on the bottom. And that does not have anything to do with these two lines down here. These two lines became massive support for Bitcoin for, as everybody knows, months and months and months. Then some other things happened having to do with this giant triangle that Tone identified with a phase 2 trend line or phase line in Hyperwave. But without that Hyperwave line, nothing would have changed with these two lines. These two lines have nothing to do with Hyperwave. They have to do with price action. And this became a field in which, when you got above it, it became support. And that only occurred on this 1 week period. And then we got back into the range again, and the lower line provided support until it didn't. Now, I've been arguing that these two lines come back into play. And this has nothing to do with Hyperwave. And it has nothing to do with RSI or MACD or stop and reverse points. They all can be used at various times to make decisions. But I have been calling, every time we get below that line, that if we get back up to it, it's going to struggle. I don't say it cannot get above it. I'm just saying that early on, when we dropped down to 3,122 on this candle, that if we got back up, which we did over and over and over and over again before getting repelled until the last pop that we just had last week. Now, there's nothing magic with me saying that the top of this range is 4,200. And every time we go and test it, I'm expecting it to get rejected. That's why I said I have my doubts that Bitcoin would be able to get back above it. Tone and Benzen and Willy Woo and a lot of very, very smart traders are looking for higher prices because we dropped so sharply, became so oversold, actually got down to 30 on the RSI, and that makes perfect sense to me. My only point is that as you get back up into this range, you've got to be very careful about what we just saw happen with a run back to the 4,200, not quite, 41.95.30 basically, and then complete rejection. And now we're trying to go back up again. Now, I've been listening to Tone talk about this could have been bottoming action. He just has to wait and see. And so does everybody else, including me. We could start reestablishing a move back up. It's got to work its way through this, and it's got to break above it. Now, you can imagine what will happen if we break above 4,200 on a closing weekly basis. Just from typical, you've heard me talk about these parallel lines that I call fields when we were up at 10,100 on Bitcoin. Because this range at the 10,100 to 11,100 range to me was very significant because of these bottoms over here, these tops over here. We came back up to 10,000 here, and then every other time we couldn't get back to it. So I had a range from 10,100 to 11,100 that I call the Valley of Death. It's the same thing in this range, from approximately 5,800 up to about 6,300. That's a range that is support when you're above it, but is very heavy resistance when you're in it or below it. Same thing with this range that we've been talking about today, between 4,000 and 4,200. Now, that's a tiny little range. But for that range to have exhibited the characteristics that I'm now describing makes it more and more real to me, not less and less. Now, the way I'm interpreting this chart right now is I still believe that if we come back up to the 4,000 area, we're going to struggle again. And I have my doubts that we're going to be able to get through 4,000 and 4,200. But I completely agree that if we do that, and that's an if we do that, we will very probably be able to run back up close to 5,000. That 5,000 number is dropping in my mind very quickly for a lot of other technical reasons having to do with moving averages, stop and reverse points, and other things. And I'm going to talk about that in a minute. But what I wanted to clarify is all of the confusion in Twitter about trying to put my calls at this 4,200 level in with the hyperwave theory. So my comment was, I don't care what happens now to the upside. Hyperwave tells me prices are going lower and probably much lower. That's what Hyperwave says. But in the meantime, any counter trend bounce to this action, which is a major bear market, is not one I'm interested in playing, only because there is a superior technical signal in play, which one is hyperwave, two is stop and reverse points, and I will show you what I mean by that right here. Stop and reverse points have only been positive for this 4-week period in the entire down move until recently. We do have a break of the weekly stop and reverse points over the last 2 candles. That run that we had, that pop that took us all the way up to 4,200 was enough to touch the stop and reverse point, and now that becomes support. That stop and reverse point now comes in at approximately 3,400. If we go back down to 3,400, we will go back into a negative price movement relative to the stop and reverse points. That has nothing to do with Hyperwave. That has to do with Wells Wilder's stop and reverse points. So now I'm going to take that off, and I'm going to look at a completely different technical tool that has nothing to do with Hyperwave, which is Consensio, or moving averages. And here is what they look like. The long term is still headed down rapidly, and it is now sitting below 5,000. Excuse me, 5,048 as of this week, but it's dropping at $125 per week, which means that next week it's going to be at $49.25, and the week later it's going to be at $4,800, and a week later it's going to be at $46.75. That's important because now the price is way down here again, below this 4,000, below the 4,200, with the major signal rapidly coming down, and nothing's going to stop that until prices get above that, somewhere around 5,000, which will then become 4,900, 4,800, 4,600, and very quickly this line is going to be down into my zone between 4,000 and 4,200. And if price can't get up to it sometime in the near future, in my opinion, it's not going to do it. And it has this stumbling block in its way, 4,000 to 4,200. Now, I called it dumb luck the other day that I had called the 4,000 to 4,200 area, and the big pop we took only took us up right below that level to 41.95. That's just dumb luck. These lines aren't drawn that specifically. That's why I call it a field. All I know is these parallel lines act as a zone that it gets more and more difficult to cross. We won't talk about the S&P 500 today, but Tone and I both identified the area between 2,600 and 2,800 on the S&P as such a zone. And for the last 8 weeks, we've been trying to get from that 2,600 up through it, up to 2,800, which we just did this morning. Now, if we turn down from here, which it looks like we might, according to the sequential trading system in the S&P 500, then you drop back into the zone and maybe below it. So that's why these zones are so important to keep in mind. Now, on Bitcoin, I've got another zone drawn below all of our price action. And I just want to take a quick look at that by bringing back the candlesticks, taking off the moving averages, which are still very negative, even with all this recent activity, to show you these lower zones. Now, I draw the zones by going back to areas of support and resistance in earlier periods. That's why this 4,200 is drawn the way it is. It refers back to what was going on as we were going up. Below these, it becomes resistance getting back above it. We've got another zone down here. that runs from 20, just below 2000. Let me get it exactly. I'm going to put that number at 1930. 1930 is the bottom of the next zone, and the top of the next zone is about 2860. It's a wide zone. And that, I believe, is why so many people believe we can get down to that 2800 level, and maybe that will be the ultimate bottom. I can't make that call at this point. We haven't really tested it. Price, real-time price, will tell us exactly where we are. But you can identify these zones before you get to them. I could have drawn all of these in when we were still up here in price, because they don't go away. They will go on until price comes back down to test them. And only when they're tested, such as this zone between 5,800 and 6,200, do you know how strong or weak they're going to be. I had no idea that these two little lines between 4,000 and 4,200 would give us so much resistance and support for so long. But every time that they do that, it lends more credibility to what these zones are all about. So I'm preparing for these next two zones. I believe they will both be taken out, and that has to do with Hyperwave. Okay, so I just wanted to make all of those things clear before I now talk very briefly about what people are saying is my 100% confidence that we are going down to 1,000. Unless you understand the rules of Hyperwave, that sounds as crazy as it sounds. Nothing is 100% in investing. The closest thing I have found in all technical analysis to 100% confidence, which is really 99% plus, has to do with two rules of Hyperwave. One is that when phase 4 of a Hyperwave breaks into a 5 and up to a 6, there's almost a 100% probability that that 6 will never go back above the previous high. The other rule that is almost 100%, 99% plus, is that once a hyperwave goes through phase 1, 2, 3, 4 and breaks into a 5, the resulting move down will go back to the phase 1, which is 1,000. Now, I know that sounds crazy. And I know that having 470 some odd examples is not a statistically certain sampling. When polls are taken, usually the number used is about 1,100 samples. And that assumes that the samples are all random, completely random, and they never are. That's why one poll will say something and another poll will say something, and they both used 1,100 random samples. But what happens in practice is that 1,100 is got a bias. You've got more Republicans than Democrats. You've got more blacks than there are relative to the overall population. You've got more Hispanics. You've got more women. You've got less women. You've got more rural, more urban, on and on and on. And we all know that polls taken with just a sampling of 1,100 examples are often wrong. My conclusions about Hyperwave are bizarre because we've only got a very few number. I came up with these numbers when I only had 175 examples. Those numbers didn't change when I had 250 examples. The numbers haven't changed now that we've got about 475 examples. I am not ignorant enough to say that we are not going to find examples that don't meet those two rules that I just stated. I'm just saying that after 40 years of looking for them, I haven't found any yet. And now we've got almost a couple hundred people looking for them in all kinds of markets all over the world. And I will be very happy to see that there are some examples. There are not going to be many, but there will be some examples when my first rule about the phase 6 or my second rule about going back to the phase 1 does not apply. But put yourself into my position. My position is that if something has occurred 400 times in a row, the probability is pretty darn good that on the next example, it's also going to occur. Tone had a great vlog the other day in which he said, if he knows for sure that he's got a 51% probability on some event occurring that is repeatable, that he will take that trade every time and put $1 on it. And what will happen is over a very long period of time, he will make a lot of money. That's the way casinos make money. They know precisely what their probabilities are. And they want you to play something that has a 2, 3, 4, 5% house advantage. That doesn't mean on any given flip of the coin or pull of a lever on a slot machine that you're not going to win. It just means that if they can keep you there doing that trade over and over again, you're going to lose. That's why they make so much money. And that's why Tone's observation was so correct. That's at 51%. The sequential trading system has something on the order of a 75% probability that when it gives you a 9 signal, that X is going to happen. That's about the highest I have ever seen in all technical analysis. If you can do 55 or 60% and use money management to offset your gains and your losses, you will continually make a lot of money. But this stupid thing that we're looking at now called a hyperwave has got such an impossible probability because of all the examples that we've studied that there's no way I can't repeatedly say what I believe the final target's going to be. And that is 1,000 on Bitcoin at some point. And I don't think we're anywhere near it in terms of time, but I don't know that. But I just wanted to clarify the differences between 99 out of every 100 investment decisions that I make have nothing to do with hyperwave theory. It has to do with all these other technical and fundamental tools. And this is just one simple example of that in terms of the recent action. I cannot tell you what is going to happen with Bitcoin prices tomorrow or next week. I cannot tell you if it is or is not going up to 5,000. I can tell you that because of these two lines, the probability is that we are not going to be able to get over 4,200. Now, what's the percentage I would put on that? Not very high. I might give it a 60% probability. And that's only because it's proven itself so many times already that other people that don't understand about these horizontal trend lines or these horizontal fields will simply notice that at the $4,200 level, every time price gets up to it, people sell. And Tone made the very good observation yesterday. Why did we drop so sharply? And the answer was simple, because people were front running that $4,200 level. Not that they did the analysis I'm talking about, simply through observation that there is this trend line right at this 4,200 So that after you had this enormous run, hundreds of dollars in a matter of hours, people start thinking, well, I've just got this profit, or this thing that I've been in that I've been losing on, all of a sudden I've got a big chunk of money back, and they begin selling. So to a certain extent, it becomes self-fulfilling. Okay, I'm going to go off screen share out of Bitcoin Wisdom. And what I want to do is I want to bring Tone in because I did listen to him this morning, and I did listen to him last night and twice yesterday. And I love the way he's analyzing this action. So I'd like to hear what he's got to say. So I'm going off of screen share. Boom. Boom.
Hey guys. Hey guys.
Hey, Don.
How's the background noise?
A little loud, but if you talk extra loud, then we can hear you.
Yeah, like I was really hoping. I'm not sure if my cell phone. I'm on my cell phone. Anyway,
We can hear you.
yeah, Tyler, that was really great. Thank you for also praising me as well. And so all my thoughts on the price of Bitcoin are very clear, right? Well, actually, they're not very clear, right? And so everyone all over the blogosphere is like, I've done like four short videos over the last 2 days. And I was very bullish, and then I was bearish, and now I'm borderline neutral. And everyone is like, well, you were calling for the bear trap at 2,900, and that didn't happen. And then you were calling for the move to 5,000, and that didn't happen. And everyone is like, well, you're wrong, you're wrong, you're wrong. And my answer is, welcome to trading. Like, that's what trading is. Like, it's not about being right or wrong. Like, I give you my best thinking every time I hit the live button. But the moment the live button ends, that's it. You're on your own. You gotta set your stop losses. You gotta do your own thinking. Like this morning, I'm actually can't. I have no idea what the S&P 500 did, right? But this morning, when the futures markets opened on an up gap, I said in my video, you have to get out of the S&P 500 because of sequential. I wasn't guessing. It was technical analysis. And apparently someone tweeted at me, and I saw the tweet like an hour ago, Tone is so wrong, the S&P 500 is booming to the upside. And I'm like, well, so what? It doesn't matter. Like, not very few people trade the futures market. You have an entire day to get out, and people are assuming that I said buy the S&P 500 yesterday. I did not say to buy the S&P 500 yesterday. In fact, I said buy the S&P 500 perfectly at the bottom of this down move, right? So I called the S&P 500 at the bottom of the trend channel, which is exactly where it reversed. So if you just made like 500 points in the S&P 500, you need to get out. It doesn't matter if today is going to close at the high. It's at resistance. It's at resistance on a weekly scale. It's at TD9 on a daily scale. You get out. If it breaks through, going into end of week, you can get in next week. It doesn't matter, right? But you have to preserve a month, like 2-3 weeks worth of unreasonable gains for the S&P 500. Unreasonable.
Yeah, absolutely. The S&P right now is at 2810, up 17 points, which is 0.62%. What people are forgetting about your call is on the last 9, you were saying get out and be short. And within a matter of days, before any damage had been done, you reversed that because sequential told you to reverse it, and you've been long ever since. And that brings up a very important point. which is some people in Twitter have said, oh, don't listen to Tyler, because if you listen to him, you're going to get wrecked in Bitcoin. And I want to be very clear on this point. Anyone making that observation does not understand investing or trading. When I tell people to be out of a trade, which I did 14 months ago on Bitcoin, and we're sitting in cash, and the market runs from 6,000 to 10,000, which Bitcoin did with me sitting in cash, people said, your clients are getting wrecked. And I said, how are they getting wrecked? They're sitting in cash. If they've got $100,000 in cash at 6,000 on Bitcoin, they've got 100,000 in cash at 10,000 on Bitcoin. They haven't lost a penny. Now, in each of those cases where the price then dropped from 10,000 back to 6,000, the people that were saying my clients were getting wrecked got wrecked, because they were in Bitcoin and their 100,000 quickly dropped to 60,000. And then at 6,000, their 60,000 got cut in half to 30,000. My clients with 100,000 in cash still have 100,000 in cash. What happens if Bitcoin goes to 20,000? And I never tell my clients you should get into it. My clients have $100,000, the same as they did before. What you are talking about, those of you who say if you miss an opportunity like the S&P 500, when tone sequential, it has a 75% probability of calling all the nines properly and getting you out at the right time. You've got 3 out of 4 probability that that is the correct move to make. Now you sit in cash. What happens if the S&P starts going up again? Well, if you know sequential, the sequential is going to get you right back in, because you're going to get a price flip, then you're going to get a 2 above a 3, and you're going to be back in. But if you had $100,000 at the beginning of a move from 2,300 up to 2,800, you've just made $500, 500 points on the S&P from a $2,300 base. You're up 18 to 20% on your $100,000. That means you have just made $20,000. And Tone's got a signal that's 75% probability saying, get back into cash. Now you've got $120,000, and you're saying you're going to be wrecked if the S&P goes up? No, you're not. If the S&P doubles from here, you are still in the money and you're in cash. What you've all got to understand, everybody that listens to us, is that it's money management. It's not being right on a trade or wrong on a trade. It's knowing what the probabilities are of protecting the assets you already have, not making more money on some hope that something is going to happen. If everybody had known the simple rules of Hyperwave 14 months ago, I assure you that billions and billions of dollars in crypto and Bitcoin would still be in the pockets, in the wallets, on the exchanges of hundreds of thousands of people. And that is just a simple tool. Now, if we don't go down to 1,000 and we turn up from here and we keep on going, which I think is a possibility. I don't say it's a probability, but I'd give that about a 1 in 5 possibility of happening, which are not horrible odds to begin putting money into Bitcoin after it's dropped 80%. Am I telling people to do that? No, I am not. And the reason I am not is because I am so certain, not that we're going to go to 1,000, but that we are going to take out the lows of 3,100. take out the lows of 2,800, and somewhere in that zone that I just pointed out, between 2,200 and 2,400 or 2,500, I very probably will tell people it's time to begin dollar cost averaging. But that is basically 50%, 40 to 50% lower than we are right now. Therefore, I'm not ready to make that call.
Tyler.
So that's just a real brief synopsis of what you heard Tone say and what I wanted to say today about some of the comments that we've been hearing. I think it's the difference between knowing many, many markets, many, many asset classes over many, many years that both Tone and I have lived through, that allow us to be a little bit what sounds cavalier to some people about how easily we throw out, it's time to get out, or it's time to get in, or it's time to think about. The most important decision you will ever make is getting out of cash and putting it at risk in another asset that moves up or down. And that's the point that you have to be very certain what you're doing. You're going from 100% certainty into something that's not going to lose or make you money, into something that may or may not lose or make you money. And that's exactly what we're talking about. Yeah.
Hey,
Okay.
Tyler.
Yeah.
I just want to jump in here and say, like, I have, I saw half your workshop. I keep seeing, like, every time you do Hyperwave, I had you on my show that very first time, and we introduced Hyperwave. But at your workshop, I saw the first half of your workshop, and then I had to run out. And when you did the webinar, I again saw the first day, most of the first day, and I haven't watched the second day yet. But tomorrow I'm driving down to Taj Mahal. And it's like a 3-hour drive, and I'm gonna watch it in the car. So I haven't seen the second half of your Hyperwave shows, but I understand Hyperwave pretty damn well, and I really wish I knew about it at the when the Bitcoin did go into a phase 6 and phase 5 and 6, because maybe I would have sold most of my Bitcoin had I known about Hyperwave back then. I didn't know about Hyperwave till later, till it was already too late to take advantage of Hyperwave and Bitcoin. So no, it is definitely legit.
Well, that's a great shout out from a great technical analyst, and I really appreciate it.
Tone, do you mind if I come in?
Yeah, please.
Well, you will be very happy right now, Tyler. Hygiene Lee is actually watching right now and has a good question for you. Can you hear me? Tone, I'm muting you.
Oh, I got it.
I got you. Tyler, can you hear me?
Yeah, Hyjin Lee. I really respect his work.
He is watching right now and has a good question for you.
Oh, great. I'd love to hear it.
Awesome. And just if I can follow up on what you guys were saying is, something that Tyler and I always try to talk about and have in the portfolio, sorry, bad win, is that, sometimes people don't understand what wealth is or all the different types of assets that you have. And specifically when it comes to money management, that we talk about all the time, is money management demands the recognition of shifts between asset classes, right? And especially right now, the crypto space is competing for the attention of investors who use both fundamental and technical analysis. But when an asset class begins underperforming relative to other asset classes, it's going to be de-emphasized or ignored. And when an asset class outperforms, it's going to be emphasized and adopted. So yes, it's not just Bitcoin, and you can't just use blind faith, but you need to actually consider the opportunity costs of what you're looking at, but also what assets you should actually emphasize, and that is money management rather than just being dogmatic. Okay, that's my little spiel. So, Haijing, thank you for joining us, and it's a great question that I think that you'll be excited to answer, given that also Haijing Lee, Tyler's been following you for a long time. I will tell you that. Okay, so he wants to know, is Hyperwaves, can Hyperwaves be applicable for both linear and semi-log charting? With the question coming from trying to understand how Elliott waves and cycles can jive with Hyperwaves.
What a great question. I have actually spoken with Robert Prechter back in 1980. We sat down and we talked Elliott wave and hyperwave, and he was convinced that they are very similar in a lot of ways. They're very different in other ways. Just point number one, and I have studied Elliott I've read all of R.N. Elliott's original writings. I've, of course, read all through A.J. Frost and Prechter's book from 35 years ago on Elliott Wave. And I've been a subscriber to Elliott Wave International probably longer than anyone else. I got a letter from them thanking me for being their longest subscriber after about 20 years of getting their monthly reports, which I still have all of. And I go back to check it all the time in terms of how accurate it was on various asset classes, particularly on gold, but I've also done it on various currencies and all of that sort of thing. A tip of the hat to Haijin Lee. I think out of everyone that I've ever listened to, he is the best practitioner or Elliotician that I have run into. And the only reason I say that is because his question about the similarities or the applicability of these two systems, Elliott wave and hyperwave, is something that I've tried to understand for the last 20 some odd years. Now we've got about 100 researchers, Socrates and Sweet Pig and David and all of the others that spend literally all their time searching hyperwaves around the world and then sharing it with people and analyzing it. Unfortunately, I don't have an answer for Haijin because the studies just have not taken place. We're trying to get machine learning and artificial intelligence to take a look at the rules and to optimize all of the rules. That's about a 2-year program that we're just starting. A couple of people have got a big jump on it. And we are in the middle of writing a book with our great friend Socrates, trying to put as much of this peripheral but important information that we have found about hyperwaves together, looking at things like Fibonacci and looking at things like Elliott and the close relationships between Elliott theory and Fibonacci numbers and psi and the golden mean. We are exploring that for hyperwaves. But thank you for your question. I wish I had something more definitive. I would love to begin talking with you more directly and put you in touch with some of our researchers, because I think there's a lot there to be learned from all of us.
Ty, last follow-up on that is just specifically, can hyperwaves be applicable for both linear and semi-log charting?
A lot of people say that it can. I have not seen the ability to do that. It distorts my vertexes, and therefore it distorts the phase lines. They're similar, but they're not exact. One of the things that is very important about hyperwave rules is that if you draw parabolas or a parabolic move under the phase 2, 3, and 4 going up, and down from the phase 1 through the 6 down into the 7, if those are parabolic, there becomes a space between the linear line and the parabolic curve that in a hyperwave, price never enters that space. And that tells me that the parabola is inconsistent with hyperwave. Hyperwaves are linear phases. They are not curves. I've had PhD mathematician from MIT attempt to come up with algorithms describing the various phases. And he came away, this was 25 years ago, with the conclusion that they were not linear and they were not parabolic, they were nonlinear equations. And since I am not an advanced mathematician, he quickly lost me, but I've kept all of his observations. And now that we're turning this over to people that really understand machine learning and AI, I think we're going to get to the bottom of it. So that's a very perceptive question. My tendency is to say they must be linear, not parabolic, and therefore you cannot use semi-log or log charts. And maybe it's just that you can't teach an old dog new tricks. And I'm just resistant to that. I would love to see work done in that area.
Thanks, Di. Tone, I think, has to leave. Tone, last thoughts of any changes you have since your last stream, and we're going to miss you.
Hey guys, hey, so thank you so much to all of the Hyperwave fans that have been watching me eat in the bottom right-hand corner for the last 45 minutes. We have ate an unreasonable amount of food. So you can see it right here, what's left. And there's actually an extra dish. Like we did not order the chicken originally. So we ordered like 7 dishes and it's like 3 of us. And it's all pretty much gone. And it's so funny because my friends, oops, sorry. Oh, sorry again. There's like too many buttons. There we go. Do you see me now?
Yes.
There we go. So, yeah, so my friend's here at the table, and my workshop attendees, and they were listening to you guys on like a delay, so they pulled up the video on their phone. So they're like sitting across from me and watching me eat at the video. So it was like really funny here on our end here. But yeah, so you know what? The price action right now is really weird. Like, and the other problem that I have, so there's 2 problems that I have, right? So trading is all about, like Tyler, like you said, trading is all about risk management. I can tell you what I expect the price to do, but it doesn't have to do that. If my risk management is legit, it will continue to make me money. And the only other thing I will say is, people need to understand that when an analyst says, I don't know what's going to happen, maybe you should not be trading this current asset, that is valuable advice. That's not stupid advice. That's potentially some of the most valuable advice you can get.
Yeah, what a great point that is. There is always another train coming. The biggest problem which I've had with people in the crypto space is they're not aware of all the other things that are going on, and therefore they're all in or all out, and that really causes your emotions to become magnified. If you know that you can put your cash into gold, or you can put your cash into the S&P, or you can put your cash into a specific stock, or put your cash into a currency, or keep it in cash, that's the most valuable thing you can do as an investor. And the only other thing I'm going to say is, Tone, tell your friends that my favorite food in the world, by far, is Indian food. I will go way out of my way in any city to get Indian food. The first Indian
Tyler.
Yeah.
Tyler, I agree with you, which is why, yes, I have been cheating. And this is bread in my hand, right? So, like, I never ever eat bread. Like, the only way to get Tone to cheat on a healthy diet with bread is to make it Indian bread. Yeah. And it's even worse when it's actually in India, right? Like,
Yeah, it's
so this is the last time I will be eating bread this entire year, and the year just started.
wow.
So
That's
there
great.
it is. And but yeah, so I'm just gonna close out. I had like one last thing to say. Right. So here's the last thing I want to say. Um, I don't really know what's gonna happen in Bitcoin. I was looking for a bear trap at 2,900, followed by a bull trap at 5,100. It looks like neither of those things are going to happen. It looks like we're gonna go down below 3,000 at this point. What I will say is, in the last 6 months, there have only been three good trades. One of them was shorting Bitcoin at 6,000 in October, and the breakdown happened in November. Shorting Bitcoin after the fifth time the 6,000 support held was the best trade in the last 12 months.
Yep,
Uh, the
absolutely.
only the only other two trades that were globally that were excellent was shorting the S&P when it broke the prior low, and then 4 or 7 days later going long the S&P at 2,300. And I believe you and I, Tyler, called both of those or all three of those absolutely perfectly. I mean, you weren't really talking about the triangle at 6,000. I was. You were just talking about the overall down picture, right? So
Yep.
I can't really give you credit for the break at 6,000 on Bitcoin, but the S&P, you called very well. You shorted it, and then like 4 days later, you dropped the short and you went long. And I did the same thing on the S&P mentally, not in my retirement account. And I tried shorting the shit out of Bitcoin at 6,000, and unfortunately, due to forces outside of my control, the trade failed because I got dumped from the exchange. But but those were my only three trades I would have made this year, and that is actually, I credit that to Martin Armstrong, in the fact that he taught me the longer you trade, the less you trade, and the more selective you get in your trades.
Great, a great lesson, great observation. I would only say that the phase 2 break at 6,000 was what got me uh, excited. And I did not expect it to drop to 3,100 so quickly, but it just shows how powerful hyperwave phase lines can be when they pre-break. And thank you very much, Tone. Thank you, everybody. I'm going to turn it back over to Leah.
That's it. All right, sorry guys. I'm sorry. Okay,
Muted,
I'm actually
Leah.
gonna get going. I'm gonna get going, guys. Yeah,
Okay.
Tyler, you are right. I agree with you. I did not think Bitcoin was gonna drop to 3,000 either from six, but 3,000 was the target. It was the triangle target. I didn't think we would drop there either, but we did drop. And you're right. That was the break of the phase two line. So I should give you credit for expecting a big drop at the moment we went below six.
Great. Thanks. Have a great time, Tone. Appreciate it.
Bye, guys.
Leah, you're on mute.
Hey, Tom, before you leave, can you hear me? Nope, he's gone.
Just
Okay.
lost.
All right, Ty, you want to end it or you want to take a question? It's been over an hour.
Yeah, if you see a good question there, I'll certainly answer it, but then we should go. It's going to be a busy day because of the stock market, I think.
Markets are insane right now. And did you see the Shanghai Composite?
Yeah.
Oh my God. It's my understanding it's up the most since 2015.
Yeah, very, very big moves. And this is breaking the S&P above my resistance at 2,800. I have not come out and said I'm going to put the rest of our cash in the market. For those of you who are our clients, don't expect anything today, because I want to see if this 9 on the sequential is going to turn us down. We could fade big time going into the close today. and we are up at such a high level at this 2,800. I want to give it every possibility to prove to me that it's ready to start and move up to the new highs. And I don't see that as of this morning. So that's a great observation, Leah.
All right. Yeah, I think we'll end it. Guys, you did send really good questions. Tyler and I will definitely hit it with the vlogs this week. It's, I know, been over a week. So I have them written down. Yeah, Ty, I mean, it's crazy. Just so everybody knows, there's the mining conference, the big one in Florida right now. So I expect big mining news to come out. Lots of like the hostile bids, if you saw all the different bids that are happening right now. Yep. And then actually, not surprisingly, but talking up Australian mining and gold.
Yeah.
We have interesting news on the yield. We have interesting news for pretty much all the markets. S&P is going crazy. For everybody who hasn't followed GE, they should. They're selling off the biopharma unit. Lots of interesting stuff. So let's get the heck out of here and make our clients money. What do you think?
Terrific. Great. Thank you all.
Bye, everybody.